I hope everything's good. I don't know. I've had to switch my layouts, guys. So um, I'm just hoping everything's good. Um, let me see if I can pick up my charts. So I've got display. Need to add image. Something is not right here, guys. I'm not able to pick up my chart for some reason. Add browser display image window capture. Let's try window capture. There you go. Okay. Pop out the chart. Pop out this. Put this here. Pop out this. Put this here. Oh, why am I doing this? That's chat. Go back there. Chat, pop out. That there. Okay. Live chats. Let's go. Let's go. Okay. Can you guys see? Let's stream there. Refresh the screen. There you go. Why does it look weird there? Oh well. Screw it. Okay. I believe there's news just now. Let me look at the news. Let's see the news. Economic calendar. It is a Monday, so Monday with news. 8:30, which is a couple minutes. United States Durable Goods Order MOM. Okay, so let's see. Let's see here. Reset the chart. Okay. So the stream's not going to be as flashy as it used to be. I'm not going to really... I could put some background music on, actually. Let's see. Some of the videos have been copyrighted because of the background music. So yeah, I just got to be careful. Okay, let's try that and see. We got Nasdaq and ES. The Nasdaq and ES. This is the 1 minute chart. We've got 4 minutes. Let's see if we can look at the top down. Okay, there we go. That is, yeah. I want to go here. I mean, look at this craziness. What the hell is this? Let's just do this. All-time highs. I mean, this is crazy. 15 minutes. Respecting a 15. Pushing up. Inversing a 15 here. I mean, this is bullish for now. It'll probably come up to here. Let's just put this back on. It'll probably come up to here, sweep these highs, and decide from there what it wants to do. So, I think it was Thursday or Friday. I can't remember. We got wrecked, guys. So, we're doing the demo account for a little bit again until we don't get wrecked. So that's the strategy. So we got wrecked, so we do a little bit of demo and then we try again and then we see. And then if we don't get wrecked, then great. Okay, so waiting for news to come out. Any minute now, probably another minute until news. So Asia went up, consolidated a bit, pumped up, it's consolidating up and down, and now it's pumped up. So it's gone down. This is what we just saw, this pump up, go down, go down. So this could be this move up, which means this move will come down slightly to about here, right? And then we'll see a big pump. Massively due for an overcorrection, a reaction, put it that way. Oh, Khan's in a long for gold. He's changed his name. Okay. So let's look at gold. This music is a little bit irritating, I'm not gonna lie. So we have swept London lows for gold. We have not swept the lows down here or here, but it has swept London lows. Yeah, so you're probably looking at a push. perfect AMD setup on the 15 minutes. Accumulation, manipulation down, sweeping the London lows, leaving a fair value gap, which I'll draw now. There. Respecting it nicely, actually. But if it inverses, it could very well be GG. Your name says Dark Thread. I don't know. Come in. Yeah? What's up?
Thank you.
Okay, cool.
Thank you so much.
All right. Okay. Decide to change your name back, eh? Since you're a subscriber on whatever, dude, that name. That was my cousin. She brought the car keys back. She needed to borrow my car, so. Nothing happened with news, Khan. Nothing happened with news. Nothing happened. Who's getting paid? Did you win a trade? Is that why you're saying getting paid? Oh. Our local celebrities getting paid again. Won another $1,000 trade. Damn. Yeah, bro. Okay, so gold, as you can see, is not that exciting right now. If it inverses this fair value gap, then it can get more exciting. Bit of a downward trend. There is a fair value gap on the hourly above, and the 4-hour fair value gap above there during Asia, top of Asia. Oh, at least you're up, which is natural. It would only amaze me if you were down. And this?
Gift.
Uh,
Too many gifts here. Hang on. You're drinking them.
yeah. Have you asked her yet?
Hmm?
Have you asked her yet?
Who? Eh?
Mm-hmm.
About what? For the money.
Mm.
No, she doesn't. She doesn't get very many things. She's got a few things this time to give anyone else.
No, I'm talking overall, Mom.
Yeah, no, she knows. If she gets the money, she's going to give me money.
Mm. Okay.
It's
Just
gone through. It's gone through to him. So we're waiting for him to reply. But the lawyers have sent it through.
okay.
Did you give her the keys back?
Yeah, yeah. Just letting you know. Here is fine. WhatsApp is fine. Not there. Actually, could be something if it closes above in 4 minutes and 32 seconds. Look at this trade. There's the 5 minute. All of this accumulation, manipulation, sweeps the London lows. Inverses it here. Retest up. What I mean. This is exactly what I mean. Could take a shot here on the 15-minute. Something like this. Probably at the that there. Yeah. I think we go to the lows there because there could be another sweep down to the lows and then go up. That could be a possibility. Because on the 5, there's a fair value gap there. Small one. 3, fair value gap. Fair value gap. So multiple fair value gaps in this area. So we give ourselves room. If in 1 minute and 45 seconds it inverses here, then you can take this type of trade. Stop loss there. Oh yeah, oh yeah, get up a tasso no mahera mandasso. Oh yeah, oh yeah. You know what? I don't think we need to go all the way down. Yeah, I think we can go to the bodies there. I think that's okay. We do 4 units. 30 seconds inverse. Come on. Close here somewhere. Inverse it. Our first target will be this fair value gap here. Let's see if we actually get the trade. It needs to close in 5 seconds above. Oh, technically that's a close. Sorry, market. I was on a limit order. Stupid. Okay, so this will be a big trade. So in other words, it's just a trade, a long trade. Our first target will be here. Okay. So we'll probably go break even at the start of that. So let's see if this trade plays out, guys. This is the first call out of the day. So let's see if it actually works. 4 hour and 1 hour is bearish because of the move down. Look at this big move down. So we got the inverse here. We got in slightly late. Not too much of a difference there. So let's see if this actually plays out or not. Now that we're on a demo account, these actual trades will play out. If this was a live account, you can bet your ass that they would come down another time, sweep, get us out, and then go. That would probably happen. So let's just see. Let's see. Okay, let's just look at another pair while we're doing this. Okay, euro, bullish, bullish, bullish. Oh, okay. We have swept the Asia highs. There is a liquidity higher up, which is the previous day high. Yeah, guys, let's see. Did not inverse on the 15-minute. If think about it, inverse there with not such a big wick, then this could potentially go down, but okay. So guess we can go back to gold. Look at gold. Khan, I hope you took this trade, bruh. You could easily go to break even because I know your stop loss might be like here somewhere. If you look at the 15. Now, if you are the type of person, okay, to take these trades, but do it like this. Let's say there's the inverse. Here's your stop loss because it's below the fair value gap. One to two. Okay. Here, where we targeting to go to break even would be 1 to 4. So yeah, guys. All depends on where you put your stop loss, how many contracts you used. Look at my WhatsApp. It's all good, bro. Don't stress. Don't stress. I'm asking, are you in gold for a long? That's what I'm asking. Did you get in? Because you said you were up 100, so I assumed you were in. But you probably got in down here somewhere on the 3 minute. Because you like the 3 minute. So possibly you could have got in the retracement there. Did you send it to me? Oh, you did. What is that? The 1 minute? Ay, Bukan. Since when do you trade the 1 minute, bruh? You always make fun of me. Oh, you see, you're only getting the 1 minute, the 1 minute. Yeah, bro. Okay, so you got in there. Interesting. So you're coining it now, bro. You should be up like $500 by now. Cheapest. If not more than that. There to there. Yeah, bro. Another win for the local celebrity here. Oh. Oi, oi, oi. Oi, oi, oi. Gatto mannato. So this wick is no good. Is no good. I still think it's gonna come up to here, at least, which will give us time to take a stop to break even. You are probably already at break even, so it wouldn't surprise me. Let's see, guys, if this trade plays out. On paper, you have accumulation, manipulation, sweeping liquidity, disrespecting the fair value gap. Just look at the hour. No. Is there a 4 hour? Resets. Okay, so there's a 4 hour fair value gap that it's respecting. So I think this is a very good time for it to go long, because you're respecting a 4 hour fair value gap. If you look at the 15, you've got a 15 minutes that it's inversed after sweeping London lows, okay, and you have a clear move now to the upside. So we are going to target this area here, this 15-minute fair value gap. That's probably going to happen. However, if we blast through it, then there'll be a retest of that area, and then there'll be Asia highs can target, London highs can target. So yeah. Last week was a little bit bad, guys, for me personally, not for you guys, because there were 2 days of good call outs and 1 day of me taking the absolutely wrong trade at the wrong time. And then we got wrecked by CPI. So, yeah, not a good week. Good week for call outs, not a good week for implementing. Okay, so it looks like it's moving in the right direction. And this is what I mean by pattern recognition, guys, is that if you can recognize this pattern, okay, this pattern here, if you can recognize that, accumulation, manipulation, and hopefully distribution. Looks a bit weird. But if you can identify that, guys, so this will make it more clearer. Let's do this. Accumulation, manipulation, sweeping the lows, and of course, distribution. There. This is basically, if you can see this pattern, okay, like that. If you can see this pattern, accumulation, manipulation, leaving a fair value gap in the manipulation leg. This has to sweep some form of liquidity. It has to. There is no exception to this rule, guys. I must make this very clear. There is no exception to this rule. You cannot be like, oh, it almost swept liquidity. Oh, it just touched liquidity. No. It needs to sweep liquidity. See this big wick? If I go down to the 1 minute, see how it's closed below? Okay, this is a sweep. This, right? There is zero exception to this rule. Right? It must, on the manipulation leg, it has to sweep liquidity. Then it must come up, inverse a fair value gap that it left, and then if it inverses, you can either take it straight away, right? Stop loss, your stop loss, you can decide where to put your stop loss. A lot of people will put their stop loss at the lows simply because it's safer. Some people will put their stop loss just below the fair value gap over here. Okay, which means just blast to floppy dick pattern. Yeah, bro. The floppy dick pattern. Interesting. Khan coming up with his own memes. Okay, so we've hit the fair value gap. So ideally, I would go to stop loss to break even if this was a live account. Because it is a demo account, I don't care. You know? So this can come down, come here, then go back up. Like, once I'm in, I'm in. I don't care. If this was a live account, right now I'd be going to break even. That's just me. Okay? So once you inverse the fair value gap that's left behind, you can either enter straight away, stop loss where you need to put it. Like I said, some people go to the lows, some people go to the bottom of the fair value gap to make the risk to reward a lot better. Okay? And then, as I said, you've got to then wait for the first major liquidity area, which is this fair value gap. So this wick here, this fair value gap. Once that is taken, so it's been touched like here, they've just touched it, you can then move your stop to break even, because now at this point, nobody knows. I don't care anybody says, nobody knows if this is going to be respected to then come down again, or it's going to slowly be inversed and then it's going to continue up. People will take a very educated guess based on pattern recognition, based on chart time, based on a whole bunch of factors. Okay, so if you have that chart time, those X amount of factors that we were talking about, then sure, take the trade, because based on your chart time, based on your analysis, let's say 6 out of 10 times this is going to work. So then you're good, right? You can take this trade. If you're just guessing based on hardly any chart time, or based on the fact that you're just going to copy the person that you're looking at and you don't need to actually put a trade or learn how to trade. So yeah. Anyway. So that's my analysis for this trade. Either way, technically, for the call outs, it's a win. Okay. Whether we lose this trade now or not, it's irrelevant. The mere fact that it got to this fair value gap means that this trade is a W. Okay, so it is a win, because if somebody was taking this, they would either be at break even or they'll be at 1-to-1 and they'll be out. So that in my book, that's considered a win, because it's someone could have taken this and gone 1-to-1 and cashed out and been extremely happy with it. Okay. Okay, so Kyle, I think this is going to be a big trade for you, bro. If you hold it all the way to previous day highs, it could be a $2,000 trade, easy. $2,000 to $3,000. So yeah, probably more. So yeah, another big payout is coming your way. Very good, very, very good. Okay. Yeah, but I thought that was a 24-hour thing. I thought it reset, bro. So you can do large amounts, but then you just don't trade for 24 hours or the next day. Then you can request it, right? Hmm. It's looking quite interesting. I can go through other pairs, guys, but I'm just putting this here and leaving it because I'd assume you guys want to either ask questions. Trades need to be 500 or less, and I need a total of that for a payout. You mean your next payout? You've already got one. If I do bigger ones. No, I know that. I know that. But what I'm saying is that the consistency rule for profits, I thought it only applied for like 24 hours for some reason. Because you said it all went down to zero again. But anyway, I'm not there, so I don't know. What I would like to do, excuse me, I'm a bit tired, yeah. What I would like to do is, like I said, do 1,000, and then just do like 2,500 by just doing decent sized trades. Okay, so in other words, what you're saying is you need to, whatever you make on day one, right? You then need to um, work out what this 40% is for a total. So 40% of 1,000. So it'll be what? That's actually no, it'll be 2,200, 2,400. Is it 2,400? that you would need to then make without going over the $1,000 day. So you would then need to consistently make just under $1,000 a day for 3 days and keep doing that. Sounds right, I think. Which is exactly what you're trying to do now. It's just on a bigger scale. So it actually makes no difference what the initial, I would say the initial, well, it kind of does in a way, because you either blow your account quicker by having bigger amounts, or smaller but your payout is less, but you can have more attempts. So I don't know, it just depends on the style of trading, I guess. So if you're risking, let's say, $500 a trade, you basically got 3 trades, because it'll be 5, 250, right? So there's your 3 trades. If you're risking 250 a trade, so 250, so you got 5, you got 5 attempts. 250 is actually a decent size, to be fair, because you can do 1 to 2, which is 500, 1 to 3, 750. Yeah, I don't know. Anyway, let's look at NASDAQ. NASDAQ. See if it's doing what I said it's gonna do. So if you follow this pattern, came down, pushed up, came down, pushed up, starting to push up. So it's literally following exactly the same pattern. So longs technically are in play here, because it's respecting this 5 minute. So if it does push up with the green candle, you could look at taking the highs at the top here. But on the other end, if it inverses this here, it won't really mean too much, because it hasn't swept any liquidity and then did that. So it's still respecting a 15 minute. Look at the consolidation. So on the 3 minutes. So if this shot down to here, respected this fair value gap by sweeping all this liquidity and left the fair value gap to inverse, you could look at taking that to come up here. It is in the middle. In other words, it's not like at the, like here, for example, or here, for example. So it's not at a key level. So it won't be A++, but it will still be an entry, because there's a fair value gap. It will respect, bounce off, sweeping all this liquidity, inversing another fair value gap, and then going to the all-time highs. So that would be a small entry, I would say, for NASDAQ. So let's draw it up just for shits and giggles and see if it actually plays out the way we're thinking it. So we need 1 or 2 strong candles. Respect this area, right? So this is what we would need. Path. So we'd need there to there. Okay. And then this would be like a fair value gap here, or there'll be a bigger one like this somewhere there, and as it inverses here, you would then take that all the way up. So that's what NASDAQ, I would reckon, is the decent long opportunity. 2 minutes. 1 minute, 5 minutes. If this wick wasn't here, this would be a decent 5 minutes as well. So that's what we would need to see. Okay. ES. Look at the 5 on ES. Look at the 5 on NASDAQ. There's a slight SMT. Not heavy, but slight SMT from there to there. From there to there. Let's look below. Not much. See how it's doing it, guys? Strong red candle down here. Let's see if it bounces off or not. Look at the 3 minute just to make sure. So if this stays red, then this will be a fair value gap that can be used in this trade. If this stays red. So if this comes back up, then this falls away, of course. Just like that. So the fair value gap just got smaller, which is no good. Yeah. Let's look at oh, what happened there? There's an inverse there. Okay, so now we have gone into the 3 minute fair value gap, right? We have created this fair value gap. So two conditions have been met. Whether this blasts through or not is now irrelevant, because if it inverses this fair value gap and targets these, then this trade is no longer valid. You know what I mean? Unless on a higher time frame, like on the 15 or the something like that, it's more valid. So if you look at the 5 might be decent. But needed to respect this fair value gap here, to be honest. So if it shoots down to like here and then starts reversing, we can maybe look at something. Okay. A little bit chilly here by me. That's the only thing about a 15-minute trade, guys. It's not something you go in and out. Not something that just happens. You have to sit and you have to wait and you have to basically just not obsess about it, because if you sit here every minute or every 10 seconds worrying about if this is going to go down or up, it's going to be a long day. Let's see. Okay. I'll admit, if it taps in there and respects a fair value gap there with the wick like this, it doesn't look too decent. But like I said, guys, live accounts should have stop loss at fair value gap already. Okay, so Nasdaq, let's see what's happening here. Oh, hello. So we have 5-minute respecting. Okay, so there's a nice rejection. Okay, so it's definitely holding up with this fair value gap. Okay. Ideally, you would take the, you would need the 3 and the 5. But it's going already. Look. As long as it doesn't take this, guys. It can come up to here, it's fine. It just must not take this. If it takes that, the trade is no longer valid. Why, do you ask? Great question. I knew you would ask a great question like that, Khan. Because if this comes up and sweeps this internal liquidity, nobody then knows if it's going to come down again because it's hunted that liquidity, or if it's going to carry on going. We have 39 seconds. We could actually take this trade on the 3 minute. However, there is a 5-minute here that needs to be inversed in 3 minutes. So that is the risky part, right? So if you went limit, right, and you said, okay, stop loss below this fair value gap, you could get away with that, right? So market, and we're a bit late. See how let's see if it comes down. Yeah, let's just buy. See, ideally, okay, I know it's going to come down slightly. You would enter right there, but we entered higher up. Okay. could have got a much better entry here. And again, ideally, this needs to, it's not valid until this 5-minute inverses. So we've made a mistake. We should have actually waited for the 5-minute, to be honest. I thought it would stop here and just keep going. The nice thing is that if it comes down, I can actually drag the stop loss if I feel like this trade is going to work. The only problem is, look at this reaction. Look at the reaction. Holy crap. As we entered the trade, guys, there's a death candle. So I'm not even going to bother moving the stop because we deserve to be knocked out here. This is a lesson that's being learned right now. Okay, what did I say before we entered the trade? There's a 3-minute that inversed, but there's a 5-minute that needs to inverse first. So we broke the rules and we entered into the 3. Why? Because we thought it was going to just go. Okay, so this 5-minute here, it's going to stop us. I don't care. It's going to stop us, right? Because of this reaction, it just has to stop us out here. But this 5-minute fair value gap was actually the most important one in this trade. It's that simple. See? It stopped us. Okay? Which is good, right? Because that's a lesson. Live, on Kick, and YouTube, the lesson was learned. Conditions were met. This was never, ever, ever, ever going to be an A++, no matter what it was going to do here. Because there's no sweep of any massive external liquidity, right? So, sure, look at this reverse. The 3-minute looked decent because there's a 3-minute fair value gap. It respected it quite nicely, actually. It then came up, it inversed the 3-minute fair value gap, although there is a tiny fair value gap up here that I did see, but didn't want to really, and then look what's happening now. So this, I could have moved the stop loss down, but I honestly thought if with this death candle going down like that, no matter how far I pushed the stop loss, we were going to get wrecked. But the overall direction that I was looking for was bullish because we needed to take these highs here. Okay. If you looked at the patterns here, all right, down, push up, down, push up. And the same thing happened here. How's our gold trade looking? We're getting wrecked. Okay, that's fine. Like I said, if this was a live account, I'd be at stop at break even, so we wouldn't have lost this trade. But it's a demo account, so that's fine. It's not a problem. Except Khan, I hope you've taken profits or you've exited this trade. You better be at break even at least. Nah, you can't be trolling me that hard. I'm saying you better be at break even. This thing's dumping, bruh. Better be at break even. If I look at the 1 minute, it's basically, yeah, it would, if you had break even, then you're out this trade. So I think he got in here, guys. At this level here, if I'm not mistaken. Where was it? Here, somewhere here. which is where price just swept. Okay, so the lesson was learnt live, guys. It also doesn't help that it was minutes before the market open, which doesn't help, right? So what we do now is we switch to NASDAQ and ES, focusing mainly on NASDAQ and ES from 9:30 because that's the market open and that's what we need to focus on. So we have just swept liquidity, which is good, right? Big fair value gap on the 1 minute. So if we clear this, market structure shift. If you have a bullish bias, you could enter here, but I don't think so because it has already swept liquidity. Let's look for a SMT forming. Okay. That's a 5 minutes, 1 minute. Let's look at the 1 minute. There to there. I mean, there is a big SMT, but let's look at the 5. Let's see if we can get the SMT on the 5. There to there. There to there. So yes. Okay, so let's just draw this out. So basically, there to there. There to there. So there's the SMT, right? Templates, SMT, SMT. So there's the shorts. Shorts are coming into play now. SMT formed. The inverse was there. As I was telling you guys, I was just busy doing the SMT. So there's your short right there. Okay. Right there, guys. Boom. Stop loss. Safely above the highs there. You could do that. Okay. This is an option if you're targeting London lows or anything like that. Swept liquidity, right? So this could be another sweep down in order to take more all-time highs. Okay, but because of the SMT, this could actually be a dump, right? So you could either go stop loss above there, okay? So let's see. Let's see. Okay, so initially, guys, there was a shoot up, swept all the liquidity, leaving a fair value gap, right, after all this accumulation, right? So let's look at the 2 minutes, 3 minutes. So look at all of this accumulation, guys, all right? So then you drop down to the 1 minute and you look at this bang all the way up, okay? So after all this accumulation, it's just swept it in one or two candles on the 1 minute. It's left a fair value gap on here. It has strongly inversed. See how this one red candle inversed the whole gap, right? Which means this could come back up and test this fair value gap it's created, right? And if it does, and then starts to move down, that can be an entry as well, right? So just for shits and giggles, maybe we should actually take a stab at this and see. Stop loss. Market there. Stop loss here. Let's see if it respects that fair value gap. See, because if this comes up and inverses this fair value gap, then that could come back up to the highs, right? So it all depends on what it's going to do now. Holy. Okay. This is why you don't technically trade first 15 minutes. 5, 4, 3, 2, 1. Let's just take a short. Never mind. It inversed. As you can see, it inversed. So we can't really take a short there. If you had taken the shorts there, then you would be in this trade. A lot of people would have exited now because of the inverse. So they would have been like, it inversed. I'm cutting the trade. So when it does this, it could inverse here to take the highs again and then do a dump, right? So it all depends. First 50 minutes, so unpredictable. So unpredictable. Could have got out here. So there was a chance to get out there, but I don't really care. Okay, let's focus on this. All right, so we're gonna have an inverse here in 27 seconds. There could possibly be an inverse here, which means there's a small fair value gap there. That's probably gonna get inversed. So you could technically take this. Stop loss there. Should we go for it, guys? Yes, let's go for it. Oh, don't tell me we limited in again. Sell? It's not letting us. Interesting. Oh, it was just delayed. It was just delayed. Did I do multiple orders? Oh no. Well, let's see if it's right, guys. If it's not, it's not. It's fine. It did inverse and then come down, but both ES inverse chair, Nasdaq inverse chair. So it's basically just the bias at this point. Do you believe it's going to come down or do you believe it's going to go up? It's that simple. When it comes to the entries and the technicals, that's the entries and technicals. It's got nothing to do with your belief of what's going to happen with this trade. Ideally, the stop loss should be up here. And I'm only doing it like this because if it was a live account, I'd probably push the stop loss higher. To be honest. So we'll see what happens. But ES and NAS seem to be going in the same direction. See, I can always just reset the paper trading account, guys. So if I lose here, it's okay. It's not a problem. Oh well, we'll probably lose this one. It inverse here. Can't really see what's happening there because of the indicator. Fair value gap. Interesting. So we'll probably lose this. There you go. Callouts are good today, except for the ones we take. Lost that as well. There's the sweep. What is that? How many trades in a row? Yeah, we got wrecked today. Great stuff. Still doing what I said, but it's just doing it in a different way. So funny. So funny. Consolidating. See, my rationale by doing the first trade was because I was the first presented after a massive liquidity sweep, right? So initially I thought, okay, sometimes Nasdaq will do a little move or a move like this, and then it will dump down or pump up, and then it will just consolidate. So it'll do a big move and then it'll consolidate for a while. So I thought, okay, let's try get into that big move. So as it shot down and inversed strongly here, I thought, okay, this is the big move. Bang, in, right? And then instead of doing a big move, it just consolidates. So now if this consolidates for long enough, look at this accumulation, right? Accumulation. This is a sweep of liquidity that, or is now a strong liquidity. So if we get a strong candle up, or 2 or 3 candles up, creating an inverse, coming down, inversing it for a short, that'll be similar to this AUD model, power of 3 model. But just here, without the sweep, is just no good. Look at all this. Boom, 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 boom. Untradeable, basically. You'd be stopped out by now, Khan, if you left your stop loss where it was and didn't go to break even, which I hope is not the case. I hope you at least put your stop loss to break even. Okay, okay. Now there's not much to look at because it's just going sideways for now. Gold has come down for another liquidity sweep. Okay, so technically it's not that it looks bad, it's just that it's another sweep of liquidity. Here is a fair value gap that has been left behind. There's a bit of accumulation here. I wouldn't say it's an A plus setup. I would say this is hard to describe. Maybe a B plus if it inverses somewhere around there. What happened, bro? What happened to your trade? Okay. Did you at least make some money or did you get stopped out, bro? You made $3. Interesting. But you must have been up at some point. You must have been up like between $500 and $700. Surely. You had to have been close to 500, which means you should have just taken it because you said that was your target. I'm just going based on the picture you sent me. You were at least 1 to 2. Minimum 1 to 2. Yeah, I know that. But even one unit, you were at least 1 to 2 is what I'm saying. So, yeah. That would have been like 200, 300, somewhere around there. Cool. Oh well. Even you get stopped out at break even sometimes. Then you know. Guys, I should just end the stream now. I need to just end the stream now because if Khan gets stopped out at break even, then the markets are completely fucked. Then it's completely fucked. When Khan wins his trade and he makes 500 to 1,000 or whatever the story is, then there's a bit of hope for us. Because then the market is like, okay, yeah, we're going to reward this oak. So who else is next? Boom, 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 boom. You know, get in line. But when he gets stopped at break even or he loses, market's fucked that day. So yeah. Duh. You're right, bro. You get break even sometimes, like today. You're absolutely right. Recommend, enjoy, have a good one. Enjoy your sleep. I'll catch you later when you wake up and you start irritating me at 1 in the morning, 2 in the morning. Cool, man. Okay, I think it's time to go through one or two fundamental rules when it comes to trading. So that I think, because a lot of people really want to know these type of things, and I might not have 100 to 200 to 300 people listening or live, but you know, someone might click on this one day who watches the replays and goes, interesting, I didn't know that. So for that one person that eventually watches this and goes, okay, sounds interesting, this is for you. Okay. When it comes to trading, you have different sessions. You've got Asia, you've got London, and now you have New York, right? These are just different time zones with different markets that are opening. And like New York is New York session from 9:30 onwards and so on, right? So the most popular one is New York session, right? So from 9:30 to 11 is the most popular time. Then you've got the AM, that's the AM session, and then you got the PM session, right? So you're basically looking PM is from like what 1 to 2 p.m., 3 p.m., somewhere around there, right? Because your break is from 12 to 1. Okay, and this is New York time. A couple things are going to happen during the day. A couple things we look at when it comes to trading. Firstly, you got to look at the economic calendar, the trading economic calendar. Okay, the one that I use and Khan uses is what is it called? Yeah, FinLogic. Okay, FinLogic, and it's basically the economic calendar, and it tells you all the news that's happening today, right? So every day you check it before you go on the charts, and you see if there's red folder news. If there's red folder news, you try not to trade 5 minutes before and 5 minutes after unless something really presents and it's very obvious. Okay. Another thing is that you do to learn trading is that um, when it comes to learning trading, and this is the thing that I struggled with for years, okay, is accepting that there's a strategy out there for you and you only, okay, and that unfortunately you might go through a few strategies before you find the one that actually suits you and your trading style. You might be a person that is more aggressive with your entries, or you might be a more patient person who's willing to wait an hour, a 2 hour, 3 hours to actually let a trade play out. Or you might be, I think it's called a swing trader, which is I think that's the term for it, which is basically you put in a trade, okay, and you can sit 2, 3, 4 days before you exit that trade, okay, because you're looking at the weekly time frames and the daily time frames in order to place your trade on the hourly and the 4 hourly, right? So there are so many different ways to do this that a lot of times people will say, oh, that's the wrong way, this is the wrong way. It's like, no, 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 no. There are thousands of ways to trade, okay, and hundreds of them are correct. They will make you money. They will actually, you will, if you stuck with that strategy and it just clicks. Because I think you've got to have a moment, okay, you got to have a moment in your trading career where it just clicks, everything falls into place. All of a sudden you're looking at the chart and it just makes sense, okay. Now for me personally, okay, for me personally, I don't think I've had a click moment where like now my whole world just makes sense with trading. But I've come close a few times, right? Now let me elaborate more. There's a strategy called the inverse fair value gap strategy. And I probably have spent a year solid trying to learn this and master it, okay? It's probably the one that I've spent the most time on in terms of the strategy itself, because I've joined multiple discords in order to learn it. And how do I say this? The amount of accounts I've blown through trial and error trying to figure it out and understand it, because you might know on paper how to do it. Like, you might know the technical analysis on how to do it. So you might know that you are waiting for a liquidity sweep. okay, that you're waiting for SMT, that you're looking for an inverse for internal liquidity, external liquidity. You know, you might know all these things on paper, but the second you sit down in front of a chart and you actually look at the candles live start to form in different ways to what you just learned for a few weeks. So let's say you did a course on inverse fair value gaps. You joined a Discord like Lewis or Dodgy and you decided to do their course, right? You've now seen them trade for a week, right? Now you sit in front of your screen and you're seeing the candles and you go, oh crap, the candles are not forming the same way that they did for them. So how come the fair value gap that I'm looking at is not as big as the one that they had, or vice versa? How come mine is too big and theirs was a lot smaller? You know what I mean? So how come this candle that they were referring to is a lot smaller and has a bigger wick? So there are tons of questions you're going to start asking yourself as to why and how and who, and it doesn't look like right, it doesn't look the same. What happens if it does this? What happens if it does that? There's hundreds and hundreds and hundreds of potential scenarios that you are going to go through in your head on this one single strategy. And that's why people get confused. That's why people start struggling. And no matter how many times that these guys say, oh, I'm just going to simplify it for you. I'm just going to do this. I'm just going to make it so that anyone can look at this and anyone can follow it. And it's going to be so easy. It's hard for them to make it to come across as this is simple. This is easy because they've done this one strategy for years on repeat every day, Monday to Friday, solid for years. That's all they've done. They've probably studied a few things before that. They've probably done what you've done, okay, except they've stuck now with this one strategy. Okay, so they've looked at the chart, they've got years of experience. So when they tell you, oh, it's so simple that my 10-year-old niece, I can teach her and then she'll be able to trade it in a week, you know, because I'm that good of a trainer. Like, no. Hang on a second now, okay? That's not how it works. Actually, looking at the charts here, give me a second. Right? Something is actually forming here that could be extremely interesting. And what do you think it is? Accumulation, manipulation up to sweep a bunch of liquidity, which is what it's just done. Okay. RCT concepts, right, will say that when the fair value gap is formed, there's a market structure shift, which is what it's saying there, MMS. It's going to respect it and carry on going, which it could very well do. But if it inverses it, then we're taking it down. So if I go back to my little rants, guys, when they say they can teach a 10-year-old or whatever, and the 10-year-old will be successful, no, they won't. Okay, maybe a few might, but on general, no. Why? Because that 10-year-old or that whoever they claiming they can teach doesn't have the chart time that they have, doesn't have the hundreds of hours of looking at backtesting, looking at charts, seeing the pattern recognition. Because that's all it is, guys. All it is. The mere fact that I've just pointed it out right here, I just stopped what I was doing and gone, oh, okay, this looks good, this looks decent, is because it's pattern recognition. That's all it is. If you can identify patterns in the market and go, all this crap I'm looking at, all of this, okay, how do I make sense of it? Well, you don't. You can't go like this. This is one thing you can't do. This candle means this. This candle means this. This candle means that. This, you cannot then go, this candle's this, because there are trading courses out there that'll say this candle is a hammer, okay? Because it looks like a hammer. There's the wick, there's the head, so it's a hammer. So when you see this candle, it means this, okay? That you can do. You can learn what all the candle names are. You can learn the terminology behind every single different candle, which is great, right? But until you go, okay, now that I see this hammer here, right? Because this is, let me just give you an example. When you see these candles going down, right? And this last candle in the middle here is a hammer. So it's got a big wick with the hammer. It looks like a hammer, right? That means buyers have stepped in, and sellers are basically saying, I've got no more gas left, right? You see how it's left? But that's just one confluence. That's one, I would say, one petal on the flower, okay? The other petal is this. There's a fair value gap right there. That's the next petal, okay? Now, if I go to the hourly, reset chart, okay? Where were we? Crap. I don't even know. Just go to the 5. Where were we? Here. Okay, so this is on. So the other petal to this, okay? Remember I said there's going to be multiple petals to make the flower. We've got 2 petals. The third petal is that this is a 5 minute. Okay? Now, a 5 minute, if you had to drop at, let me put it this way. If I go to the 15 minutes, let's try find another petal to see, to make this make sense. Okay? Here. Okay? This is where it is. So if I look, okay, here's the third petal, right? Look at the 15 minutes. Boom, 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 right? The 15-minute fair value gap is here. This came into and tapped halfway into the fair value gap. This is just a random example, guys. Okay? There's the third petal, right? So let's go back to the 5 minutes. This is just a stupid example, guys. So you've now got 3 petals. Can we make it 4 petals to make it a trade? Right? Yes, we can. Why? Because 1, there's a hammer. Okay, 2, it's on the 5 minutes, which is a good time frame, right? 3, there's a 15-minute fair value gap it respected. Okay. 4, actually, let's just see if there's another petal here. Let's just see. There to there. Look at that. I mean, look at this. Okay. You do the, now you've not expected to know what this is. The Fibonacci retracement. Okay. Which you go from this low to this high, and that retraces down into the 0.786 level. Okay, which is one of the trade. This is the markers make it model, which is what Khan normally trades. Okay, how it bounces. There's the 15-minute fair value gap at that same level. So there's another petal to your flower. Now your flower is starting to look good, right? The fact that your flower has a few petals on it means that it's not just a stem with a bud. It now has a couple of flowers on it. a couple of petals, okay? Which means the second you can identify that this could potentially turn into a nice flower, the last petal in this specific scenario is the fact that this green candle shot up and closed above the fair value gap there, which means your stop loss could potentially be at the bottom of that candle right there, or at the fair value gap level there. That's up to you, right? And then you can target a 1 to 2, which is there, or as I said, up here you can target all of this. So you see what I'm saying? If you just know what this candle is, it doesn't mean anything. You can't just learn what all these candles mean. This candle's a hammer. Did it shoot down? No. It went down a little bit, right? But how come this... Let me just get rid of this. How come this hammer only went down there, like this far, but this hammer went this far up? Why? You know, you start asking yourself why. How come this hammer formed, right? But then it just kept going up. But it's a red hammer. So technically when this forms, that means buyers are getting weak. Sellers came in and that formed. So why did it keep going up after that? You see the questions. So you can never say, because you see a hammer here, that it's just going to start going up now. Right? Look, if I go down the line here, let's just say all these, okay, well this, there's a hammer here, right? Did it just keep going up? No, it went sideways. Do you see what I'm getting at, right? So it's like, you might know what the candles are, word for word. So you might study your arse off, okay? And know what all these candles represent. That's a hammer. This is a doji. This is this. This is that. You know? All these candles have specific names. Personally, I don't give a damn about the candles and what they called, okay? I couldn't care less. It means nothing to me. Let's just see here. Is there potential? There's definitely an inverse there, but there's no inverse there. Interesting. So what I've learned over the years, guys, the most important thing with trading, there's actually, to be honest with you, I can't even complete that sentence. One of the most important things with trading, I should say, not the most, one of the most, is pattern recognition. If you can identify patterns, then you should be good. Another thing is psychology, because you are not trading against other people, although you are, okay? You are not in competition with other people. The only person that you're in competition with is yourself. You are trading against yourself. What I mean by that is that you are the one that is going to determine if you're going to exit this trade or hold on to it. So you are going to actually psych yourself out of closing that trade too early or closing it too late and then getting wrecked. Scenarios are going to play through your mind, and you are going to trick yourself to believe certain things, to do certain things that are against what you should be doing. Logically, you will say to yourself, if I place this trade now, okay, so if I put a short in here now, stop loss above here, right? Let's just say I did this, right? And your technical analysis said logically, this is the trade, right? And let's say this candle starts to flip green now and starts to go up. Logically, you're going to say to yourself, well, sorry, not logically, psychologically, you're going to tell yourself, oh no, I'm in the red. I'm seeing minus, 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 minus. I can't take it anymore. What happens if it gets up here? That means I've lost, let's say, $200 or $100. And every time it moves a little bit, it's 10, 20, 30, 40, 50. Now it's at $50. And now you're like, wait, $50 is how much? That's this. You start playing in your mind, well, how much, what you could do with $50. And then it starts tricking you and you go, oh crap, I need to get out, because what happens if it gets to 60, 70, 80, 90, and then I lose? Okay. I'm telling you guys this because this is what happened to me. Every single thing I am telling you is what I have been through with my psychology, with the way I trade, with learning strategies. I spent hours learning the candles. I've spent hours learning. Hours isn't even the word. Days and days and days and weeks and weeks and weeks learning all the terminology and all the crap that comes along with it. Okay. So your psychology is going to get fucked. Okay. Because you are going to trick yourself into exiting this trade when, let's just say, there was a fair value gap here. Okay. Let's say over here, there's a fair value gap. It just means that price needs to get to that fair value gap in order to sweep more liquidity up here, right? And then go down. But you're safe up here, right? So let's say price goes up here. It touches that fair value gap. But just before it does that, you freak yourself out and you say, I can't do this anymore. You close your trade. Now you've lost $50, $60, whatever, right? Then it touches that, and then it dumps like a stone all the way down here. And then you'll say to yourself in your head, holy shit, if only I just left the trade alone. If only I didn't do that. And the more times you do that, and when I say the more times, guys, I did that hundreds of times. You don't realize the pain and the suffering and the blood pressure that goes up, down, sideways, left, right, through a funnel, through a valve, like the blood pressure moments where you get angry, you get flustered, you get frustrating, the pain involved of losing stupidly and idiotically on a regular basis. Because this is what I think people don't sit down and tell you when it comes to trading. They don't sit down and tell you that it's not a matter of if you struggle and if you feel like the world's crashing around you and if you feel the pain of losing multiple trades. It's not a matter of if. That word doesn't exist when it comes to psychology. Okay? It's a matter of when. You are going to feel pain. You are going to feel frustrated. You're going to feel like the market has a camera stuck on your face and is watching your every single move. And the second that you place a trade, then it's going to just go against you. That's what you're going to feel. What's up? Oh. Oh, you're just warming it up. Oh.
Making me also.
Thanks. So yeah, let's just say that's something that the traders are not going to tell you about. Anyway, I went on a bit of a rant on what people should know when it comes to trading. So there's no surprises. It's one of the hardest things you can do in the world, I would say.
Yeah.
certainly the hardest job I've ever done, or the hardest thing I've ever tried to accomplish in my life.
Motion, it's the worst.
I'd say for people that really want to know the feeling, it's like when you go to a casino and you take $500 and you know that means something, that $500. Yeah, let's just say you saved up for 2 months. You go to the casino, you take $500 with you, you're so excited. After an hour, that thing's gone. You're sitting with $10 left. And you're like, with this $10, how do I make my 500 back? That sinking feeling in the pit of your stomach is the constant feeling that you could feel every day in the markets. And it happens a lot.
Yeah.
So it's like going to the casino, losing most of your money, and you know the next trade you've got to actually just, you've got to make it back. That's basically what I am talking about. Yeah.
Did that.
Yeah, you went through it quite hard as well. Is that for just and?
You.
Uh,
You and you.
Thank you. Is there enough meat and stuff for?
There's a chop each, and I'm going to make some chicken. Those chicken nugget things. Big thing of mesh.
Oh yeah. So what I was gonna do is take all the brown meat, cut it all up into bite-sized pieces, mix it in a pan, you know, like do that. So all the meat stuck to that chops, both beef and other chops, boerewors, all of it. Cut it all up into bite-sized pieces.
Yeah.
Put it in a pan, and then you make the mash and everything. And yeah, that's what I was gonna do. But this is fine.
Oh, this is horse, and then there's a chop each. That's it.
A boerewors roll, very good. Oh, burning my stomach. Thank you.
Some more sauce if you want. And yeah, I'm gonna make those. Gonna put those chicken butt things in there. Put them down, and I'm gonna make some onions to put in as well. Make like a gravy. Chop some chicken things. And mash.
Mm. Those new one?
I've given him the rest of the potato salad and another piece of horse.
Oh,
He's happy.
and you? You don't want some of those?
There's a roll there for one.
Okay.
Okay, I'll see you later.
Okay.
So we can make it a bit later.
Hmm. Interesting. Um, notice how ES is a lot weaker than Nasdaq. See that? That tells me that there's going to be a short coming in soon. So this green candle could create a fair value gap. And if there's a strong inverse, even though there's a lot of chop and sideways movements, yo, how wrong were we with gold? Damn. But it is also what I said when we entered, and I said if I was on a live account, I would be at break even, because the second this happens, right here, okay, the second that this happens, and this inverse happened here, it was GG. Look at this hourly and 4 hourly. These gray gaps, such a strong draw on liquidity at previous day highs. So at some point, this market needs to go down to that gap. I would go as far to say, let's see the 1, the 2. So if this 2 minute and 1 minute inverse this and don't form a 3 minute, then we can look at shorting this. But everything's bullish. Okay, obviously that's not the case. But you see, look at the S&T that's going to form if this goes any higher. Okay, so look at the S&T that's forming, right? The fact that we have that, and then we have if you look at the 4 hour and the 1 hour, look at this fair value gap here. It's huge, right? And it's at previous day highs. Like, this might be bullish, but I'm expecting this to go down, guys. Nasdaq is weaker. I mean, ES is weaker than Nasdaq. There's a SMT formed. This is a important fair value gap, I would say, in my opinion, which has been wrong today. So we will see. There's a 2 minute, there's a 3 minute. If we wait long enough, there's a 5 minute as well. So all of these fair value gaps need to be inversed at the same time, or inversed one after the other. I don't care. They just all have to be inversed, which makes this trade very unlikely, because by the time all of them have inversed, you could have already taken this internal liquidity here, which means the trade is no longer makes sense, no longer valid. It's still valid, I would say, actually, but it doesn't like make sense to take because of that. So yeah. Yeah, look at that. SMT. And there's nothing to the left to say, okay, this is now in a fair value gap, so we're going to come down. See what I mean? So there's a bit of confluences at the top that are impossible, because you then now have to rely on an SMT. You have to rely on internal liquidity, not external, because there is none. So certain factors come into play, and also the famous saying, the trend is always your friend until it's not. This could be an interesting dump at some point. If it's not now, it'll be at some point today. I think it'll be a massive, massive dump. All right, guys, let's see. Let's see. Markets are really slow, guys. Volume is just not there. It is there a little bit, but it's like, oh, look at ES just consolidating. Just do. Oh, let's see. Interesting, guys. Interesting. Hmm. Anyway, not much happening here, guys. We're just waiting for things to form. Got about 20 minutes left for the session. Because if you don't find something by 11, a lot of times you're not really going to. But I have occasionally seen setups form at 11. So if there's nothing close to a setup by 11, then I think we call it there for the day, guys. We'll see. Hmm. Is this the reversal? Hmm. Interesting. Came down, respected a fair value gap, and now it's going back up. Very interesting with a massive S&T. For the 2 minutes. There's a 3-minute fair value gap here. I would say it needs to break the 2 minutes. This is my opinion. There's a 5-minute fair value gap here. So hopefully that inverses. 55 seconds on that. Should be enough there. 18 seconds. I was really hoping it was going to inverse this 5 minutes. Doesn't seem like it, guys. So now we have to wait for the 5 minute here to inverse this, the 3 minute, the 2 minute, and the 1 minute to all inverse. And there's a 5, then there's a big fair value gap below. So if it inverses here on all of them, you can take it, but be very mindful that this is just after your entry, and it can wreck you. Okay, so look at this drop, guys. 2 minutes. There's no 3 minutes. There's no 5 minutes. There's a small 2 minutes. There's a small 1 minute. So the 2 minute could inverse. The 3 minute did inverse. The 5 minute wants to inverse. This, I would say, is the line of liquidity that we don't want to get crossed by. Otherwise, the risk to reward will be way too big. We have a 2 minute inverse. We have a 1 minute inverse. We have a 3 minute inverse. We do not have a 5 minute inverse yet. And once again, if we do not have a 5 minute inverse on this trade, we are not taking it. Stop loss. So if I go limit, stop loss will probably be here. I should go up there. Big stop loss. So we're expecting to be part of the big move down, guys. I think I'm actually going to jump in early here. We're going to take a shot. Take a shot. Why not? See, it rhymes. We have a big SMT at the top. Multiple inverses on multiple time frames. Yes, there is a 5 minute fair value gap below. That could wreck us. I get it. Okay, for those that are like, oh, but what about the fair value gap? I know that. Okay. It's a risky trade. It's not A++ in any form because of that, and because we're at all-time highs going against the trend. There's multiple factors why this won't work, but we're going to try it anyway. So I think once again we couldn't actually know. This is the 5 minute inverse. Yeah, it did. So we got a 5 minute inverse. We got a 3 minute inverse. We have a 2 minute inverse. We have a 1 minute inverse. There could be a pullback and then a dump. I believe that it's going to dump. The pullback, I don't know how far it will be before we dump. It could just take us out the trade here now and then dump. But I believe that this is going to dump. In my opinion, again, not financial advice. There is kinda, where is it there? So there is a SMT forming. Damn, I didn't see the SMT. Actually did not see that SMT. Let's see if our big trade is worth it or not. Did we catch this perfect reversal? See how it pushed up, came down, pushed up, past, swept liquidity, formed an SMT at the highs here. Okay. Came down, inversed all the time frames. And now there's a second fair value gap that it is holding up against, but it's fine because I do believe that the direction, overall direction, will be correct. I don't care if we could have got a better entry. The overall direction is what I'm looking at. Because if the overall direction is correct, then we could literally go all the way down to previous day highs here. Or at least Asia lows, or this gap here, you know? So TP will be here. I would say Asia lows. There's definitely a better entry that you could have taken here. You could have waited for the retracement into this area, looked for maybe a small fair value gap or something in there. I didn't see it, but it you know, 15 minute, let's look at the 15. There's literally no fair value gaps until here. And that's a break. This is break even area. So overall, this is the trend, guy. I mean, this is the trade, guys. So what it looks like for you would be there, there, to there. 1:3. Let's see what happens. I believe it. This fair value gap is the one that if it gets past this and closes here somewhere, we good. If not, this is the one that's going to wreck us. This is the one that will respect and then shoot up. So it all depends on this fair value gap here, guys. The most important fair value gap in this trade. Can we recover the funds? What are we down? Let's look at it. 1-3. Can we recover 1-3? This is 1-8, so Remember, this is not A plus, guys. This is nowhere near A plus. This is a SMT forming after a double liquidity sweep. We have London lows, Asia lows, and this big gap in the market here, which is a massive, massive liquidity target. Okay, so that is what I'm basing my trade on, are those factors. The SMT, the double liquidity sweep, the first one being this one, comes down, pushes up again, sweeps it, comes down. So again, that is the logic behind this specific attempt. I do kind of feel like I need to push this up a bit to there. Confirm. Yeah. I think that's a better move to keep me safe in case it wants to come up for one more touch of the top and then come down. That'll still give us 1 to 2 point. So down here, that's a 1 to 4. So yeah, there you go. Anybody interested? This is the, if I close this is the trade. I'll explain it one more time. Okay, we had a bunch of accumulation. We pushed up, we swept this liquidity here. Let me just do this brush. We swept this liquidity, right, after accumulating all of this, because we went up, we took out this liquidity, then we came down, right? The market wasn't done with us, so we pushed up again. Like as we pushed up, we left fair value gaps here and here on multiple time frames, and on multiple time frames at this one, we inversed on all time frames 1, 2, 3, and 5. I don't have the 4 minutes, so it could have been a 4 minute that screwed us. I don't know, but 1, 3, and 5 is what I deal with. We inversed, we entered. It's this fair value gap here. All right, let me get rid of these circles. This is the problem fair value gap, because if this respects like it's doing here and comes up and up for one more shot, it could take us out. However, if this comes down and disrespects this fair value gap, then we are going to head down there. So you are more than welcome to not take this trade and wait until we inverse this fair value gap in order to enter. That would be a lot safer, but then your stop loss still kind of needs to be at the highs. So instead of being this be your stop loss is going to be red, 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 red until here, basically. You know, but at least you'll be safe. So it looks like we are coming back up, right? But I feel it's just to test some of the highs again. We have equal highs here, so this is a, wonder where the indicator is for equal highs. Let me see. Indicator. A lot of them have them built in. That's okay. So if you waited until this pullback, you could get a much better Bristol award. You could easily nail this out the park. Or you could enter and then get raped up here. Because that will just wreck you. That'll absolutely wreck you if you just enter up here. Stop loss just above the highs, and this comes up to wreck you. So if I look there, okay, let's look at the 1 minute there, let's look at the 1 minute there. It's so weak compared to NASDAQ. Look at it. Look at the SMT forming. Okay. Let's see if we can make any sense out of this. Does this trade actually make sense when we think about it? It does. As I said, guys, the only issue, and it is only, I would say, one or two issues. The first issue is that this is all-time highs, so you don't know if it's just going to continue going up because the trend is your friend until it's not. Secondly, okay, is that there is a 5-minute fair value gap below the entry, which means as we entered, it bounced into a 5-minute fair value gap, which means you don't know which direction this could want to go simply because of that. Okay. All right, guys. Well, there's no point sitting here trying to work out and pray and, you know, pray to the whoever you pray to in order to make this work. It's 11, so I'm going to end the stream there, guys. If this trade plays out, great. If not, it is what it is. We took a shot and it didn't work out. So if you are still planning on taking a trade, just understand that the safest course of action from this point onwards is to make sure that this fair value gap gets inversed on all time frames including ES. If there's a 5-minute here and a 2-minute on ES, right? That needs to be inversed. So ES needs to and Nasdaq needs to, in order for that trade to then you have more confidence in it and take the trade. Stop loss maybe above this fair value gap or whichever you want to put, and then you target the lows. Right, guys, thank you so much for your time. I do appreciate it, and I hope you guys have an amazing day today. I'll see you guys very soon on another one.